So the US market just erased more than $800 billion in market cap. And let's talk about the elephant in the room, the Claude carnage. So let's start by saying that we cannot ignore the market. And Anthropic is disrupting the world. The Fortune 500 companies are bleeding like anything. And this is something we have already seen plenty of times in 2026. Claude launches a new plugin, Claude launches a new code, they launch a new software, and suddenly the market cap of the US tech companies bleed like anything, losing billions of dollars in market cap in just seconds. IBM, the legendary company, sees its worst day since 2000 as the stock tanks by 13%. Adobe has already fallen by more than 30% on a year-to-date basis. Now, these reactions of the market do not seem completely irrational. Markets try to price in real-time margin compression, and when AI takes the driving seat, the pricing power shifts to the buyer. This is the first order impact and it is very much real. Now consider highly skilled human jobs: tax auditing, legal preparation, medical services, healthcare services. Now these services consume massive economic resources because largely they require trained human attention. And AI reduces the marginal cost of just that. Every technological shift reorders the stack, and the companies which are static will definitely face a lot of problems. The Indian IT sector is down by more than 25% in a single month, with stocks tanking by more than 30%. The spends on research and development have been slow by the Indian IT companies. We have sadly also lost a lot of our better talent to the firms outside. Then in 2022, generative AI enters the market, which completely destroys the labor arbitrage mode. Clients also try to renegotiate the contracts, that in turn leads to margin compression. To stabilize the stock prices in the end, massive cash on the books is used to buy back at a higher price to restore shareholder value, while inherently the companies still find it very difficult to maintain the margins and to keep the revenue guidance at least in the double digits. Now, one very interesting question to think about is that the normalized price to earning multiples for these firms used to be in the range of around 25 times to 30 times at the best, which has now come down to around 15 to 16 times with this severe correction after the Claude carnage. Now, if the companies actually fail to adapt, will this be the new normal for the Indian IT services companies? Because the difference between global intelligence crisis and global intelligence boom is not capability, it's the ability to adapt, and the world has always found a way to adapt to change. I hope this added some value.